So good evening all of you. So in the last session we discussed why the GST was introduced in India and what are the drawbacks in previous indirect taxes systems, that what we discussed in previous class. So coming to here, so GST. So GST stands for what? Goods and Service Tax. GST stands for what? Goods and Service Tax. So generally GST is levied on supply of goods or services or both in India. So here the supply of goods or services or both in India is treated as a what? Taxable event. So what is meant by taxable event? So generally taxable event is nothing but the activity based on which tax liability is created is called as what? Taxable event. So just like in the previous indirect tax systems, in case of excise duty, the taxable event is nothing but manufacturing of goods in India. And in case of service tax, provision of services in India. And in case of customs duty, imports and export of goods, that is said to be a taxable event. In the same way, in case of GST, the taxable event is nothing but what supply of goods or services or both. So here, what is meant by supply? That we discussed in the second chapter under section 7 of the CGST Act 2017. So generally here, in case of GST, the previous majority of the indirect taxes are subsumed. So then automatically the taxable events of those taxes are subsumed under the definition of what? Supply. And it includes what? Manufacturing. It includes trading of the good within the state or in between the state, or provision of the services, or provision of the luxury services, or entertainment services, or movement of the good. Each and everything is covered here. Each and everything is covered here. The exclusive definition of the supply we will discuss in section 7 of the CGST Act 2017. So here, supply is generally classified into the two types. Supply is generally classified into the two types. One is intrastate supply and another one is interstate supply. First one is what? Intrastate supply. Another one is interstate supply. So intrastate supply. So generally we define the intrastate and interstate as intrastate supply means if the supply made in between one person to the another person within the state or within the union territory is said to be intra. And in case of interstate supply, the supply made by the one person to the another person located in different states or different union territory is said to be interstate supply. But coming to the as per the provisions of the GST law, so intrastate and interstate supplies are defined based on two factors are called as location of the supplier and the place of supply. So if location of the supplier and the place of supply are located in same state or in same union territory, those are said to be intrastate supply. If location of the supplier and place of supply both are in same state or in same union territory, that is said to be a intrastate supply. If so, that is nothing but, for example, Mr. A is located in Guntur. He provides the services to Mr. B located in Vizag. Here, the both are located in same state. That is covered under what? Intrastate supply. If Mr. A located in Delhi, he provides the service to another party located in the Delhi. Then that is said to be what? Intrastate supply. Then coming to the interstate supply, if location of the supplier and place of supply both are in different states or different union territories or in one state and another union territory is said to be what interstate supply. Okay, if location of the supplier and place of supply are located in different states or in different union territories or in one state and another union territory said to be interstate supply. So, for example, Mr. A located in AP, he supply the services to Mr. B located in Tamil Nadu. That is covered under interstate supply. For example, Mr. A located in AP, he provides the supply to the Mr. B located in Delhi. So one state and another union territory, that is said to be interstate supply. Mr. A located in AP provided the service to Mr. B located in Anna or Puducherry. So in that way, if location of the supplier and place of supply are in different states or in different union territories or one in state and another union territory is said to be about interstate supply. So this is the classification of the supply. Intrastate supply and interstate supply. So here intrastate supply generally liable for two taxes. One is CGST, another one is SGST or UTGST. CGST, SGST or UTGST. So CGST stands for Central Goods and Service Tax. SGST stands for State Goods and Service Tax. UTGST stands for Union Territory Goods and Service Tax. And interstate supply is liable for what? IGST. Integrated Goods and Service Tax, which is the combination of what? CGST and SGST. CGST and SGST. So that is the IGST. So here CGST is levied. CGST is levied as per CGST Act. CGST Act 2017, and which applies to whole India. Which applies to whole India. So previous actually have the provision which applies to whole India except Jammu and Kashmir and including Jammu and Kashmir. But now, so that provision is not required. Whole India is means including what? Jammu and Kashmir. And coming to the SGST, it applies to, it is levied as per SGST Act 2017. It applies to the state territories, all state territories and union territories having separate state legislation. Union territory having separate state legislation. So generally union territories having separate state legislation are three state union territories are there. One is Delhi, Puducherry, Jammu and Kashmir. So these three are covered. So SGST Act is levied as per SGST Act 2017, which applies to all state territories, including union territory, having separate state legislation. So here having separate state legislation, nothing but three: Delhi, Puducherry, and Jammu and Kashmir. Next, UTGST is levied as per UTGST Act 2017. It applies to union territories not having separate state legislation. Not having separate state legislation. So these are applies to all union territories like Andaman and Nicobar Island, Lakshadweep, Dam, Diu, and Dadra and Nagar Haveli, Ladakh, and Chandigarh. So these are covered under union territories not having separate state legislation. So Andaman Nicobar Island, Lakshadweep, Daman and Diu, Dadra, Nagar Haveli, and Ladakh and Chandigarh. Previously, Daman and Diu, Dadra, Nagar Haveli both are two different union territories. So recently, both are combined together and formed as a single union territory. And Chandigarh. These are all covered in the Union Territory is not having separate state legislation. In that case, UTGST Act is applied, and as per that, UTGST is levied instead of what? SGST. Instead of SGST. And here, remember, here CGST is levied by the central government, and SGST is levied by the state government, levied and collected by the state government. And coming to the UTGST, it is levied and collected by central government. Levied and collected by central government. Then coming to the IGST, IGST is nothing but what? Integrated Goods and Service Tax. It is levied on interstate supply of goods or services or both. Interstate supply of goods or services or both. So here IGST contains two components. One is CGST and another one is what? SGST. So it is levied as per IGST Act 2017. It is levied as per IGST Act 2017. It applies to whole India. It applies to whole India. So, and it is levied and collected by central government. It is levied and collected by central government. And later, the component of SGST in the IGST is transferred by central government to the state government. How the respected component is transferred, we'll discuss in later classes. Okay. So this is about what? So constitutional provisions. So relating to the what? Supply. So generally, supply is classified into the two types. One is intra-state supply, and another one is what? Interstate supply. Intra-state supply means if location of the supplier and the place of supply are located in same state or in same union territory is said to be an intra-state supply, and that is liable for what? CGST and SGST or UTGST. Interstate supply is nothing but what? If location of the supplier and the place of supply are located in different states or in different union territories, or one in state and another union territory is said to be a what? Interstate supply, that is liable for what? IGST. IGST is nothing but what? Combination of CGST and SGST. So this is about the supply. And if you observe here, the supply is liable by the tax is levied by both central government as well as what? State government. Both central government as well as state government. That's why in India the GST adopted is considered as a dual GST. Dual GST. So in India, dual GST was adopted. So dual GST means if central government and state government levy the taxes simultaneously on supply of goods or services or both. If central government and state government levy the taxes simultaneously on supply of goods or services or both, then the GST is said to be a what? Dual GST. In India, dual GST was adopted. In India, dual GST was adopted. And then next one, generally GST is levied on value addition of the supply. GST is levied on value addition of the supply. So what is meant by value addition here? What is meant by value addition? For example, here manufacturer is there. We supply the goods to distributor. We supply the goods to wholesaler. wholesaler supply the goods to retailer, and the retailer transfer the goods to ultimate consumer. So here, for example, here cost of the product or value of the supply is equal to 10,000. The GST at the rate of 10%, that equal to 1,000. Say CGST as well as SGST. So both. So nothing but total invoice price is equal to 11,000. So here GST payable. GST payable is how much? 1,000 to the government. This amount actually, this 11,000 is collected from what? Distributor. Then coming to the distributor, here cost is equal to 10,000 only. Because distributor, whatever the amount paid by the distributor contains two elements. One is cost and another one is element of the tax. That element of the tax not paid towards the product, that element of the tax paid by the distributor to the government through the manufacturer, and that amount will be collected from the subsequent buyer. So that's why we have to show the respected GST paid on purchase as a current asset. So we have to show it as a receivable. So don't consider as a part of the cost. Clear? So cost plus, for example, profit added by the party 5,000. The selling price is 15,000. But again, he collect what? GST. Again, he collect what? GST. GST is equal, for example, 10%. So how much? 1,500. Then total invoice price is equal to 16,500. 16,500. So here, if you observe, GST payable equal to 1,500. Out of that, already he paid at the GST payable 1,500 is collected on which product? 10,000 as well as a profit element. All this 10,000 already paid at the time of purchase of the product. At the time of purchase of the product. So he need to pay the tax only on additional value of 5,000. That's why the amount of tax paid at the time of purchase is allowed as a credit, is allowed as a reduction from the GST collected. So GST collected is how much? 1,500. Then out of that, GST already paid. How much amount he paid? 1,000. So net GST payable. Net GST payable. How much amount is there? 500. Same way, if you come to the wholesaler, what is the cost of the product? So cost of the product is nothing but what? 15,000. Actually, he paid the amount of 16,500 at the time of purchase of the product, even though he has to consider only 15,000 because the remaining 1,500 is not paid towards the product, that is paid towards the element of the tax plus profit. 5,000. Then selling price 20,000 is there plus GST 2,000. Invoice price is equal to how much amount? 22,000. So here GST payable, and the GST payable stands for what? GST collected on sales. So how much amount he collected? 2,000. Out of that, GST already paid by the party. So out of the total amount he paid, out of the total amount collected is 2,000. This 2,000 is collected on these two elements, 15,000 and 5,000. On 15,000 he already paid at the time of purchase. So that's why we reduce that amount 1,500, and the remaining amount of net GST payable is equal to 500. So if you observe this one, so in this case, in the first scenario, GST is paid on GST payable on cost with 10,000. In the second scenario, net amount paid to the government is only 500, nothing but what? 10% on the profit. 10% on the profit. 10% on the profit. Then what is that meaning? So here GST paid by the party only on value addition during the period. Value addition during the period. So in this case also, so net amount paid by the party to the government 500 only, because on this 5,000, on this 15,000 he paid the tax at the time of purchase. So he collected 2,000 but not paid completely to the government. Out of the 2,000, he already paid at the time of purchase 1,500 and the remaining amount only paid. That's why he clearly stated GST is levied on value addition of the supply. Value addition of the supply. Clear? Next. Value addition of the supply. So here, if you observe, while making the payment of tax, the two elements are there. Two elements. One is GST payable and another one is GST paid and net GST payable. So here, the amount of the tax, the amount of a GST collected on supply, and that supply is nothing but what? Outward supply. Outward supply is called as what? Output tax. The amount of GST collected on the outward supply is called as what? Output tax. And the amount of GST paid on inward supply. Inward supply stands for what? Purchase of goods or receipt of services. That is called as what? Input tax. That is called as what? Input tax. So here, while making the payment of tax to the government, that input tax is adjusted to the output tax and the remaining only paid to the government. The process of adjustment of the process of adjustment of input tax against output tax is called as what? ITC. Stands for what? Input tax credit. This is the process we applied to eliminate what? Cascading effect. Cascading effect. Okay. So the amount of the GST collected on outward supply is called as what? Output tax. And the amount of the GST paid on inward supply is called as what? Input tax. And the process of adjustment of input tax against the output tax is called as what? ITC. Stands for input tax credit. Input tax credit. So here, how the input tax credit collect? So in the previous indirect taxes, what is the one of the main drawback is nothing but what? Cascading effect. Cascading effect is not eliminated completely. So that's why how the cascading effect was eliminated by way of introducing the topic of input tax. So how the taxes are adjusted? So what is the seamless flow of the input tax? How the input tax credit is allowed? How the input tax credit is utilized while paying the tax to the government? So that is the one. So utilization of input tax credit. Utilization of what? Input tax credit. So generally, input tax is adjusted against what? Input tax is adjusted against what? Output tax. So nothing but CGST payable, SGST payable, and IGST payable. IGST payable. So which will be adjusted? CGST paid. So that is the first one. So these are what? Input tax. So CGST paid. CGST paid can be adjusted against. CGST payable And if any surplus available after adjustment against CGST payable, that can be adjusted against IGST payable, but cannot be adjusted against SGST payable. Okay, so CGST paid can be adjusted against CGST payable, and later it can be adjusted against IGST payable, but cannot be adjusted against SGST payable. And same way, SGST paid can be adjusted against SGST payable, and if any surplus can be adjusted against IGST but cannot be adjusted against CGST. And third one, IGST paid IGST paid can be adjusted against IGST payable first. Can be adjusted against IGST payable. And if any surplus available after adjustment of the IGST, after adjustment against IGST, if any surplus available, that can be adjusted against either CGST payable or SGST payable in any order or in any proportionate okay. So this is what utilization of ITC. So if you observe the last thing, IGST paid. IGST paid first adjusted against what? IGST payable. IGST payable. If any surplus available is adjusted against what? CGST payable or SGST payable. So first I can adjust CGST payable, and after that we can adjust against SGST, or first adjust against SGST payable, then after you can adjust against CGST, or 50% against CGST and 50% against SGST, or 60% against CGST, 40% against SGST. So that is the meaning, in any order or in any proportion. In any order or in any proportion. This is the process of utilization of input tax credit. So CGST first adjusted against CGST payable, and the later adjusted against IGST payable. SGST paid first adjusted against SGST payable, later adjusted against IGST payable. Then IGST paid first adjusted against IGST payable, later adjusted against either CGST or SGST in any order or in any proportionate. So that is the process of utilization of input tax credit. Clear? So what we discussed today, first one is in India. So GST is levied on what? So goods and supply of goods and services are both in India. Here, supply of goods or services are both is to be a what? Taxable event. So next classification of the supply. So there are two types of supplies are there: intra-state supply and interstate supply. So for that purpose, two factors are considered: location of the supplier and place of supply. If location of the supplier and place of supply both are in same state or in same union territory, are said to be intra-state supply and is liable for CGST or SGST or UTGST. And interstate supply, if location of the supplier and the place of supply both are in different states or in different union territories or in one state and another union territory, that is said to be interstate supply and is liable for what? IGST. IGST stands for CGST plus SGST. So then in India, dual GST was adopted. So what is meant by dual GST? If central government and state government levy the taxes simultaneously on supply of goods or services or both in India, that is called as what? Dual GST. And GST is levied on what? Value addition of the good, value addition of the supply. So how? Already we discussed. And next we discussed about what? Input tax credit. So how the input tax credit allowed for eliminating what? Cascading effect. So here utilization of input tax credit, CGST paid is adjusted against CGST payable and later adjusted against IGST payable, and SGST paid adjusted against SGST payable and later adjusted against IGST payable, IGST paid adjusted against IGST payable. If any surplus after adjustment against IGST payable, then adjust against either CGST payable or SGST payable in any order or in any proportionate is said to be about utilization of input tax credit. Utilization of input tax credit. This is the process of utilization of what? ITC. Process of utilization of what? ITC. And then next one. Next, coming to the, so in case of taxable event, so here what is the taxable event? Supply of goods or services or both in India is said to be a taxable event. So whether all goods and services are liable for payment of GST, whether all goods or services are covered. Then before that, so what is meant by good and what is meant by services? Coming to the goods. Coming to the goods. So good includes all movable property except money and securities, including actionable claims and growing crops, grass, or anything attached to the earth but dismantled without any damage or severed before removal of the product without any damage is said to be a what? Good. So here good includes what? It includes all movable property. It includes what? All movable property. What is that meaning? Immovable properties are excluded from the definition of the good. Only movable properties are covered. But except money and security. So money and securities are excluded from the definition of the good. And it includes what? Actionable claims. So actionable claims means if you observe the definition of the actionable claims, it includes those debtors which are not secured by way of hypothecation, pledge or charge, which are not secured by way of hypothecation, pledge or charge. And simply said, unsecured debtors are covered under the definition of actionable claim, and it also includes lottery tickets, betting and gambling. Lottery tickets, betting and gambling. And it also includes growing crops, grass, anything attached to the growing crops means like vegetables, fruits, etc. Grass, anything attached to the earth but dismantled without any damage is said to be a good. But he clearly stated, immovable property is not a good. Immovable property is not a good. And another one is supply of a good or services are both liable for payment of GST except one product, that is nothing but alcohol meant for human consumption. So, if the alcohol used in the process of medicine, if it is meant, if it is used as a medicine, then that is forming part of the good, and that is liable for payment of GST. Best example is in case of cough syrup. One of the ingredient is nothing but alcohol. In case of cold syrup, so anesthesia. So these are all, one of the ingredient is nothing but drugs or alcohol. So those are covered under definition of good. The alcohol meant for human consumption, that is not a good, and sorry, that is not covered under the purview of a GST and not liable for payment of not liable for payment of GST. So then which taxes are imposed here? Then previous indirect taxes are levied on alcohol meant for human consumption. Previous indirect taxes means state excise duty, VAT, and CST, service tax. These are all imposed on the alcohol meant for human consumption. Alcohol meant for human consumption. Next, another one. If tobacco, tobacco is liable for both excise duty and GST. Only the product which is liable for both excise duty and both means previous indirect tax as well as GST is nothing but what? Tobacco. So tobacco is liable for both excise duty and GST. And another one, petrol, diesel, motor spirit, natural gas, and ATF, aviation turbine fuel. So these are all covered under purview of GST with effective from date notified by central government with recommendation of the council. So here petrol, diesel, motor spirit, natural gas and ATF. These five petroleum products are not are covered under GST but with effective from the date notified by central government. But till now the date is not notified. That's why alcohol meant for human consumption and petrol, diesel, motor spirit and natural gas and the ATF, these are all covered under non-taxable supplies. Non-taxable supply. Non-taxable supply means the supply of goods or services or both which are not covered under the purview of GST. The best example is supply of alcohol meant for human consumption and petrol, diesel, motor spirit, natural gas and ATF. But remember the point with D, these five products are covered under purview of GST with effective from the date notified by central government. But till now the dates are yet to be notified, not notified till now. That's why those are also covered under the purview of what? Not covered under the purview of GST at the present. At present. And so this is about the definition of what? Good. So goods include what? All movable property except money and securities, including actionable claims and growing crops, grass, anything attached to the earth but dismantled without any damage is said to be a what? Good. So here immovable property is excluded from the definition of the good. Money and the securities are excluded, and alcohol meant for human consumption is not covered under purview of GST, and the tobacco is liable for both excise duty as well as GST, and petrol, diesel, motor spirit, natural gas, and the ATF. So these are all covered under purview of GST with effective from the date notified by central government. Central government. Then this is about what? Good. Next. Services. So what is meant by service? So services are defined as anything other than good, money, security. Anything other than good, money and securities, but including usage of transactions in usage of money, transactions in usage of money and transactions involving exchange of money from one form to another form from one denomination to another denomination, or from one currency to another currency if separate consideration charged. If separate consideration charged. So here anything other than goods, money and security. Other than good, money and security. So like providing the education and providing the transportation, providing the hospitality. So these are all forming part of the definition of what service. And it includes usage of money. So what is meant by usage of money? Generally, if you observe the business, if you observe the P&L statement relating to the any business, on the debit side of the P&L account, we mention what expenses. That expenses are meant for only two purposes. What is nothing? That expenses are technically called as what usage of money, correct? So that expenses are meant only for two purposes. One is for purchase of the good, another one is for receiving the service. So purchase of the good is covered by definition of the good. Those are excluded. Other than good, whatever the amount spent by the party, whatever the amount used by the business is said to be what service. And the transactions involving exchange of money from one form to another form. I have the bill. I go to the bank. I discount the bill and I receive the cash. So here amount changed from one form to bill to cash. I have the check. I deposited in bank and then cash it. So it converted from check to cash. One form to another form. Or from one denomination to another denomination. Like for example, 2000 rupee note is converted into 504 notes, or 500 notes is converted into 100 rupee 5 notes, etc. One denomination to another denomination, or from one currency to another currency. So nothing but dollar is converted into rupee, or rupee converted into dollar, or dollar converted into pound, or pound converted into rupee. But remember, these all are considered under the definition of the good. So definition of the service only if those are meant for separate consideration. If separate consideration is not charged, then that is not said to be a service. For example, I give the 2000 rupee note to you, then you provided the 504 notes. Then there is no consideration charged by you. This is not a service. For example, you go to the bank and you have around $10,000 are there. You go to the SBI bank and you convert the amount into the rupees. Then SBI bank charges some amount of commission. The commission is said to be about service. That commission is said to be about service. So here we have the one word called as money changing transaction. Money changing transaction. Transactions involving the change of money from one person to another person. So here just money changes from one pocket to another pocket. That's all. For example, you took the loan from the bank. You took the loan from the bank. So around 10 lakh. The 10 lakh is shifted from the bank to you. The 10 lakh is said to be a principal amount. While repaying that amount, you need to pay 10 lakhs along with interest. The 10 lakh is said to be a money changing transaction. Interest is said to be about service. Interest is said to be about service. For example, you discount the bill with the bank. Actually, while discounting the bill with the bank, the banker will collect some amount of discounting charges. Some amount of discounting charges are collected and the remaining amount provided to you. Why the discounting charges are collected? So because they grant you some credit period to usage of that money. For that credit period, they need to collect what? Interest. That interest reduced by the government initially in terms of what discounting charges. The discounting charges is said to be a service and the bill amount is said to be a money changing transaction. So money changing transaction is not said to be a service and is not liable for payment of GST. Any consideration charged for that transaction is said to be a service and is liable for payment of GST. is liable for payment of GST. So if you summarize this one, so first one, all services are covered under purview of GST, and those not covered under previous indirect taxes like central excise duty, state excise duty, VAT, or CST, or service tax, and those are not covered under previous indirect taxes. Previous indirect taxes. Next, alcohol meant for human consumption. Alcohol meant for human consumption is not covered under GST. That is covered under state excise duty, VAT, and service tax if any. Next, state excise duty is important. Again, for example, if alcohol meant for medicine, that is covered under GST, not covered under previous indirect tax. Not covered under previous indirect taxes. Next, for example, tobacco product is there. That is liable for GST as well as central excise duty. That is one only a product which is liable for both excise duty and GST is nothing but what tobacco product. And then in what we discussed, so petroleum products, what are they? Petrol, diesel, motor spirit, natural gas, and ATF. And ATF. Okay, so these are not covered under purview of GST at present. Those are liable for other indirect taxes. So actually for this case it clearly stated these are covered under purview of GST with effective from the date notified by central government. Till that those are covered under non-taxable supply. And remember, if any question is there relating to the non-taxable supply is nothing but supply of alcohol meant for human consumption, petrol, diesel, motor spirit, natural gas, and ATF till now. If any date notified by central government relating to the petrol, diesel, motor spirit, natural gas, and ATF, those are covered under purview of GST. From that date onwards, non-taxable supply includes only alcohol meant for human consumption. Alcohol meant for human consumption. So this is what is meant by good and what is meant by services and constitutional provisions relating to GST. Constitutional provisions relating to GST. And the last and one of the important one is GST is a destination based taxation. Generally, there are two types of the taxations are there. One is origin-based taxation. Another one is destination-based taxation. Origin-based taxation means the tax is levied by the government where the movement of the product starts. The state government levy the tax. In case of destination-based taxation, the tax levied by the government where the product movement is terminated, where the product movement is destinated. That is said to be destination based taxation. For example, if the product is a transfer from AP to Tamil Nadu to Karnataka. As and when the product transfers from one state to another state, along with the product, the tax revenue is also shifted from the one government to another government. It reaches which state? The state where the product is ultimately utilized or destinated. That's why GST is said to be a what? Destination based taxation. These are the small basics relating to GST.